Non-payment of tax by the seller and denial of ITC in the hands of genuine buyer under section 16(2)(c is a big issue in GST, and it has been a problem area for the taxpayers across the country. Section 16(2)(c lays down the condition that for availing ITC, your seller must have paid tax to the government either through e-credit ledger or through e-cash ledger. In this important video, we shall be discussing an important and latest judgment from the Honorable Allahabad High Court in the case of RT Infotech versus state GST authorities. The case revolves around RT Infotech, a registered GST dealer who purchased recharge coupons worth Rs 1.58 crores from Bharti Airtel Limited. The company paid Rs 28.52 lakhs as GST fully through RTGS banking channels against 7 valid tax invoices and accordingly claimed ITC of Rs 28.52 lakhs. Yet they were denied input tax credit under section 16(2)(c of the CGST Act. Why? Because the selling dealer had not deposited the tax with the government. The GST department claimed under section 16(2)(c, input tax credit is only allowed if the seller deposits the tax. Since Airtel didn't deposit, RT Infotech shouldn't get ITC. Accordingly, they issued a show cause notice, passed in order under section 73, demanded tax reversal with 10% penalty and interest. But RT Infotech argued, we have paid the full tax through RTGS. We can't force Airtel to file returns or deposit tax. Department cannot hold us responsible for seller's default. Take action against Airtel, not us. They cited two major cases, Suncraft Energy Private Limited and DY Bethel Enterprises. In Suncraft Energy case, SLP against Kolkata High Court decision was dismissed by the Supreme Court on demand being lower side. In DY Bethel, Madras High Court held that firstly the department should initiate action against the erring seller before taking recourse against the buyer. In other words, buyer should not be penalized for wrong committed by the seller. The court said it is not in dispute that RT Infotech paid GST via banking channels on genuine invoices. The buyer cannot compel the seller to deposit tax. The purchasing dealer cannot be left at the mercy of the selling dealer. When the petitioner has discharged his duties diligently, it is the onus upon the assessing authority to duly communicate about the said effect. That is, the purchase has been made through tax invoices and payment has been made through banking channel, and therefore the authority ought to have counterpart of the selling dealer have initiated action, and action has been taken with the benefit ought to have given to the petitioner. It is noted that even the department initiated action against the seller but failed to factor this in. The High Court quashed the ITC denial orders. The matter is remanded for fresh adjudication with the direction that the department must hear all stakeholders within 2 months. This judgment reinforces a key principle. Taxpayers who act in good faith must not be penalized for someone else's default. Moreover, it can be said that in GST, when invoice payment is made along with applicable GST to the seller holds the amount of GST collected as custodian of the government, and a duty lies on him to remit the same to the government as and when it falls due. The department should initiate action against the defaulting seller rather than look to deny ITC in the hands of the buyer and ask for reversal along with penalty and interest. Doing so is not only against natural justice but also results in double taxation, as the buyer on the one hand has paid tax to the seller and again he is being asked to reverse the ITC with interest and penalty on the same transaction. Do you agree with this decision? Should buyers bear the burden when sellers default? Comment below and let us know your thoughts. And don't forget to like, subscribe and follow us for more such updates on GST litigation and tax insights. Thank you very much.